Hi everyone, it's Shannon from Rock Solid Financial Services. Just want to do a quick video, this educational piece, very uncut. Just basically want to run over a few things with servicing. Uh, Rock Solid Financial Services, we do home loans. However, we do more focus on the business applicant, whether it is a business lend per se, or commercial property, or portfolios or trucks or whatnot. So we do even cash flow lending. So we assist a decent size amount of clients with regards to that. We do mortgages. So and also we do a bit of personal asset finance as well. Not so much, but if they're in already clients, yeah, we look after them in that aspect as well. So we've got the two businesses: haul cut, mining and construction, equipment brokers, sales and hire. So that is that is a bit more popular than the social media of finance. It's a lot more exciting. Feel free to jump on and have a look on YouTube and Facebook. There's some pretty cool pictures and videos on there. Seems to be a lot more popular than boring finance, but there's the mascot, Wooly. My daughter dresses him up, and he seems to be very popular. So, servicing, this is just a brief overview with regards to servicing. Banks are required to make sure you can afford the loan. A lot of people or applicants expect and they think they deserve the loan because they're living with surplus at the moment, and they believe that they're they're assured this loan because they're feeling quite comfortable at the moment, even if they have a larger deposit. So this is not always the case. There's a lot of factors that are involved with servicing. Our process, or if you want affordability test. So we give you a fact find that just gives us that gives us the information for you to fill out. That's names, date of births, all the personal information, addresses, and whatnot. Then we go into the financial questionnaire, which is part of the fact find. This is where the nuts and bolts come into it. So basically, we find out your incomes, liabilities, assets. With your liabilities, your repayment amounts as well, and living expenses and so forth. So we're obliged to get that information from you as well, and to put that into a servicing calculator. Every lender is different, so every lender has a different criteria and a different appetite. Would like to put that. Some will service harder, some won't. Some like a coupled family, a nuclear family, whatnot. Some are happy with the a single person, or some like the business owner or whatnot. There's very many variations. That's why it's good using a broker to basically guide you through the best pathway. So moving forward, home loan serviceability. I won't fully read all this, as I've referred to as servicing. So it's conducted by the lender to make sure that you can afford the loan. Lenders are legally required to do this. It is enforced and mandated by APRA, which is the lowest dot point. Uh, they do apply serviceability buffers, generally 3%, some more, in with regards to interest rates, also other financial institution repayment and interest rates as well. So this is very typical across the board. Now, some lenders are a bit harder with other financial institutions. So other lenders, so say for example, you got a Toyota Land Cruiser that's financed by one of the other lenders. I won't be name dropping or anything. So they, this particular lender may think, well, other financial institutions, we're going to knock on the 3.5% on top of the existing interest rate they're paying. So, what is considered in the serviceability assessment? So, we've gone through with regards to the fact finder questionnaire that we send out. When that's completed or even partially completed, we go through that and confirm everything with you. So, income basically, these once again, these are the things that are considered with this assessment. So, with regards to the assessment, there's a serviceability calculator. Punch all the numbers into, if you want to put it like an Excel spreadsheet. Every bank's different. Everyone has their own appetite with regards to who they want to accept or give loans to. So these are the criteria that is considered in regards to that calculation. And basically, with that calculation, it spits out a pass or a fail. That's whether they can see you or as an applicant, whether you can afford the repayments on that loan. And that's in bad circumstances as well, not just the good. So, and that's actually saying like interest rate rises or whatnot. So anyway, income. So there's various incomes you can. They're only going to just name a few. PAYG wages. So basically, pay as you go wages. So that's you're working for someone, you're getting a wage. So there's certain things I want to identify with that. So wages, you got regular overtime, bonuses and commissions. So they can be shaved. So some lenders will shave the extra hours that you do or extra payments that you get from your normal your normal income. So yeah, bonuses and commissions generally they shave, let's say 20%. Some of them, some will go down to 50%. Rental income is this is quite common that they'll shave 20% off just for vacancies and whatnot. So basically, they will have 80. They will accept 80% of that rental income, and that also incorporates management fees as well. Living expenses. So we're going to move. The next slide is going to harp on this probably a bit further. So lenders evaluate your household and lifestyle expenses. They look closely at your itemised bank statements. So you still need to declare. You need to declare your living expenses. So that is your general everyday living. So electricity, school fees, transport, fuel, um, all the above with that clothing. So what they do, they compare that to your bank statements as well, make sure that it's all lining up what you say. That gets put into the calculator as well as living expense. So existing liabilities and commitments. Once again, They put through we enter the repayments of the existing liabilities, and that is added onto another expense, I guess you'd say, even though it's in a different column or different area, it's still classed as a commitment. So credit cards, I just want to quickly talk about that. So credit cards is of the limit, not if you owe $5 and it's a $10,000 limit, you're going to be assessed on the repayment of $10,000. So there's something to keep in mind. A lot of times it's a good idea. If you don't use it, just get rid of it. Just brings up your affordability a bit. And that's the same with overdrafts. Why? Is because you have the ability to draw down that loan at any stage. Um, so dependents, that's how many children or people that you care for or support. That's factored into the calculator as well. So I just wanted to explain with living expenses again. I want to go back to that. So there's a national average. So there's many frugal people. We deal with a lot of people in regional areas, miners and whatnot as well. They got lower living expenses, obviously, so because they're working most of the time. or a lot of people are quite frugal as well in the regional areas. So there's a national average, which is HEM. So there's a bit more information on there, but HEM is just a national average of that particular status. So whether it's just one person in the household, two adults, or two adults, two children, or one, they all have a HEM, I guess, stated amount of monthly expenses for that status. So people obviously are quite frugal and they might live under that mean, like we were just mentioning about before, or living under that average. So we need to come up with an explanation why, and your statements need to support that. However, it's not the end of the world. We can explain that people, we get this all the time, especially people with the farmers and whatnot. Yeah, they're not going out and buying a whole lot of shopping and all that as much as the city person most times. And also too, there's probably not many shops out there as well. So basically, that's really it. So it's more so whether someone can afford it, the loan that they're applying for on the bank's calculator. All banks are different. They have different appetites, like we mentioned before. Some assess harder, some not. Some have harder buffers, some not. So some will accept below him, some won't. So yeah, and that's also too. We do believe. We do help customers with regards to the application and things that we're like, hey, you're probably best to pay that out or whatnot, and that will make your service a lot better. So hopefully this was all somewhat informative for you. And trying to get to the next slide. It's just a disclaimer that it's educational purposes only. I'm also